Hard red spring wheat. Let's take a look at the futures and the Western Canadian cash price. My name is Trent Klarenbach with Klarenbach Research. Today is May the 8th, 2025. The first chart up here is the weekly nearby chart. It's a continuous chart on bar chart, and you can see there's really not a whole lot here to see and get excited about. We've been trading sideways for the last year here in a band between 560 and 660. It's a wide band, mind you, but it's just been going sideways. And what this tells me is the buyers and sellers are, really trying to fight for control of the trend. I mean, that's exhibited by these moving averages on the shorter term crossing over. I do get some signs of optimism here, or hope, I guess. I struggle with this chart platform here, but it's the kind of the best one for this case. You can tell it's a bit tricky, but the 50-week moving average has caught up to the price, right? It's still in decline. We're finding resistance this week from it, but it's also caught up to the 10 and 50 and 20-day moving averages, highlighted by pink and blue lines here. So that's given me some hope that we are in a stage one accumulation. And what a stage one accumulation is, it precedes the stage two markup, where we want to be long and we want to take advantage of a higher price. I still think we're going to converge on this 200-week moving average. It's just not happening as quickly as I would like. And you know what? It really does not have to happen at all. But I mean, we're not getting any sell signals at this level. This trading sideways is very difficult to sell in the break of a trend. Look at the daily chart, same thing. It's just a misery. It's sideways. We're trading below a 50-day moving average. That's not good. Trading below this purple 200-day moving average. That's not good. But I am not really giving up on the hard red spring wheat market at the moment, and in the futures. But I mean, if we break below these lows of 550, 560, then I mean, it's going to go lower. It will get the goal there at some point. I just don't think it's going to happen here, this crop here. But what the heck? It doesn't have to do what I think it's going to do. Here is the Saskatchewan price. We're using the Klarenbach Price Index, and this is the weekly chart of Saskatchewan prices, and it's relative to Alberta and Manitoba also. So you can see why I have some optimism in the price here. Right now, my index at 809. Yeah, you could probably get higher, probably get lower, wherever you're at. But nonetheless, that's what the index price is. And it's trading above this green 50-week moving average. So there's divergence between the futures chart and the cash chart, which I think is, positive for a farmer, right? So we're finding resistance from the 61.8% retracement from this high back here in May of last year to the August low. We tested it once, got rejected, came back down, found support from this 38.2% retracement, and now we're back up testing the 61.8. Now, if we can get above, what is that? We got to get above, let's say 820 just for good measure, get a close above there on the weekly time frame, then, I certainly think we're going up to this next level here around, what is that, 865, 870. So if that's the case, then, there's certainly some hope here. I do like this setup. I think we're above this 50-week moving average, which is positive. We're taking another crack. I'll say the second or third crack at this, 820 level, and it just might make it. But just take a look and see what's happening on the basis, and then that'll explain why we're seeing this divergence between the cash charts and the futures chart. And well, yeah, look at this. We're making new highs in our index basis going back to May of 2023. So it's 2-year highs here, right? 2-year highs. So it's interesting, but how far can this basis go? Well, if you envision this being a inverse head and shoulders, where you have a left shoulder, a head, and a right shoulder, and this is your neckline here at $70 a ton. What we do is do a measured move from $70 a ton down to 27. So what is that? That's 70 minus 27, $43. Add 43 onto 70, and that takes us up to, these previous highs back here. This high in the base is back in May of 2022. May seems to be an interesting time for price action. So, there's a possibility that if this measured move is completed, and I think it will, then we see a much improved basis, and this basis is explaining why we're seeing divergence between the cash and the futures price. You're going to ask me when this is going to happen. Time analysis is difficult. I could probably get more headlines, probably sell more subscriptions, making broad, bombastic statements of when price is going to be at a certain time period. But I'd rather protect you and not, maybe be right instead of wrong. It's great for chasing headlines, not great for chasing profits. So my name is Trent Klarenbach. It's sunny in Saskatoon. Life's good.